Hey, Professor Mike. What are we learning today?
Hey team, it's Professor Mike again, here to talk to you about double entry accounting. Very exciting today. What we're going to start off with is, what is an account? So an account is an individual accounting record of increases and decreases in specific asset, liability, or equity items. We call them accounts. Think about it like this. You've got cash in a business, you have accounts payable and accounts receivable, things like that. Each of those is an account. And within an account, we have three different parts. We have the account title, we have the debit side, and we have the credit side. In its simplest form, these are positioned like a T with the title at the top and the debits to the left and the credits to the right. Absolutely. Three portions. Account title, so something like cash or accounts payable, and then the debit side and the credit side. You'll hear some accountants talking about a T account. This is what they mean. So what are these debits and these credits? So debit indicates left and credit indicates right at its simplest. Entering an amount on the left side of that T is called debiting an account, and entering something on the right side is called crediting the account. Pretty simple, right? If an account has a debit balance, it means the debits exceed the credits. So there are more debits in the account than there are credits. Okay? If it has a credit balance, it's exactly the opposite. It means it has more credits than debits. Now, debit doesn't mean increase or decrease, though debiting certain types of accounts increases them. Debiting other types of accounts actually decreases them. Pretty interesting. Doesn't mean increase or decrease in the same way that credit doesn't mean increase or decrease. Assets tend to have normal debit balances, and liabilities and equity tend to have normal credit balances, which means when you're debiting an asset, you're increasing it. But when you're debiting a liability, let me hear you say it. It's decreasing, absolutely. And those are the debit and credit rules. Here's a quick overview of what debits and credits do to each side of the equation. As you can see, we have assets that are debited for increases and credited for decreases. Liabilities are just the opposite. You're going to credit them to increase them and debit them to decrease them. And equity is the same, and this is where it gets a little bit complex. Because if we just look at the accounting equation, we say, well, that's easy for equity. The challenge is figuring out, does this account that goes towards equity increase or decrease equity? For example, revenue is one of our accounts that ends up in equity. It increases equity, so we're going to, I heard you say it again, great job. We're going to credit revenue. However, expenses are also equity accounts. And to increase an expense, we would be decreasing equity, and here's where it gets a bit confusing. So for expenses, we actually debit those to increase the expense, which therefore decreases our equity. Gets a little complicated, but I'm sure you're going to be able to figure it out just fine. So in double entry accounting, why would you care? Why is this important? Well, like we've talked about before, accounting is all about balance, right? Assets equals liabilities plus equity. And that doesn't mean that every entry you make in accounting is going to have an asset and a liability. There might be an entry that has two assets or two liabilities or more if it's a compound entry. However, for every transaction that you enter, the debits will always equal the credits. And that's what we mean by double entry. Things are always going to be in balance. And that keeps the accounting equation in balance. For example, if your debits equal your credits, and you debit an asset account, it's going to go up. You could then credit another asset account, which means it's go down. So you're out of balance, back into balance, right? Or you could debit an asset account and credit a liability, right? Or what you could do is you could debit a liability and credit an asset. All different things you can do. But remember, the most important thing is that you remain in balance all the time. Now, every account, like I was saying, has a normal balance, either a debit or a credit, and we're going to talk about those in class together. I hope this helped. Bye now.